Good afternoon and welcome to BizTech's Asian Midday Market Watch. I'm your host, Jeffrey Halley, and it's the 22nd of February. Our guest today is Teng, independent market analyst based in Auckland down in New Zealand. Tina, good afternoon.
Hi, Jeff. Good afternoon.
Before we get to Tina, let's have a look at the performance of stock markets around Asia today. A bit of a mixed bag once again. The Nikkei 225 has leapt 1.51% higher, while Shanghai is climbed by 0.44%, with Hong Kong's Hang Seng just flirting with unchanged, up 0.01%. Down in Australia, the ASX 200 is also almost unchanged, up just 0.03%. With South Korea's KOSPI up 0.41% after the Bank of Korea held rates unchanged today. In Singapore, the STI has fallen by 0.51%, with Kuala Lumpur also lower, down 0.46%. Tina, what are you making of the price action in Asia today?
Asian markets are pretty much following Wall Street movement overnight because Nvidia's earnings actually blew over expectation this morning. Even though the earnings result came out after the U.S. market closed, but it's really impact on the Asian markets and the session as a technology shares all have got boosted, especially in the Japanese markets. The Nikkei 225 actually hits a record high.
Yes, I can see the Nikkei certainly caught an Nvidia tailwind today. We are flirting with all-time highs for the Nikkei. That's something I think we haven't seen for over 30 years. What's your feeling about the Nikkei at these levels? Do you think we can continue to push higher, or do you think we're in rarefied air at these levels?
I do think it is a very cautious level that traders, all investors need to be very careful. Is it from the technical charts is obviously all about, and there's like a bearish divergence emerging. So I do think that optimism now is a little bit just over the top. It could be facing correction phase. So I think from here we just need to watch out how it would go ahead. If it break this level, we go higher, or probably there's a pullback risk.
Okay, let's stay with Japan and look at dollar yen, or the Japanese yen in particular. The Nikkei's been flying, of course, but Japanese yen has been very weak, and dollar yen seems to be quite comfortably parked above 150 to the US dollar now. The rollback. Sorry, I was going to say the rollback in the expectations from the Bank of Japan as far as tightenings go. Is that impacting on a weaker yen, or what are you thinking about dollar yen at these levels?
So actually, when the dollar yuan touched 150, there are always some bets that the Bank of Japan would have the intervention monetary policy to just stop the weakness of the yen. However, I don't think the bank would change its dovish tone. It could just continue with the ultra loose monetary policy. But I do think right now, because that's still at the resistance level around 150, so there could be potentially a technical correction from here.
Yeah, I've noticed this time around, actually, that it's been very quiet as far as comments about watching the yen closely from officials in Japan. So to make your point there, we may see some longevity with dollar yen at 150. Now let's turn to China. It's been a pretty good week for China stock markets after they returned from the Lunar New Year break. Well, when you compare to the performance of previous months, what's behind this rally, and where do you see it heading from here?
There are a few factors that supported the bullish momentum. The first is the holiday spending. China during the Lunar New Year spending we see the spike in the consumer spending. Is it like the traveling and the people just buying gifts during the Lunar New Year break? So that's optimism around here with the economic rebound probably supported by the consumer consumption. And the second is PBOC's measures to cut its 5-year loan prime rate. It's the deepest cut on record on Tuesday. And I think you must see like Chinese stock markets have been falling the whole year in 2023. Probably there are some potentials here. Some stocks are undervalued. So why we can see this potentially a bottom up trend from here.
Wonderful. Now let's go to a place very close to both of our hearts, New Zealand. You're sitting in New Zealand as a Kiwi, and I'm sitting in Jakarta as a Kiwi. The New Zealand dollar has had a pretty good rally over the last week, up around about 160 points. What's your opinion on what's behind this rally? And do you think that tomorrow's retail sales data could have any impact on that rally?
Usually the retail sales data doesn't have a major impact on the New Zealand dollar. I think behind the scenes, still RBNZ's hawkish stance supports the strength of the Kiwi dollar. So last week, that statement came out from RBNZ. So they lean to more hawkish than dovish, and their expectation that the OCR in New Zealand could hit 6% this year. And that will be the highest interest rate among all the major banks. I think that's the reason New Zealand has gone so strong this week.
Right, yeah. And then as an owner of a mortgage in New Zealand, it sort of makes me cry a little bit. Anyway,
yeah,
we won't be the Kiwis thinking that, I'm sure. There we go. Hey, thanks for speaking to us today, Tina. It's always a pleasure.
Thank you, Jeff.
I'm Jeffrey Halley, and we've been speaking to Tina Teng, independent markets analyst down in Auckland in New Zealand on BizTech's Asian Midday Market Watch. This video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. You can also catch it with our syndication partners, TV stations, radio stations, and websites. Please like and subscribe to our various platforms. And thanks so much for tuning in.